report. It is 9 o'clock. Switch things up a little bit. You'll see here with the opening screen. So let's begin with the risk disclaimer. First thing first, we know there's risk in trading. Please always use trade capital only. Know the deal there. Social media slide. The best place to find me is here on YouTube, youtube.com/Chris Pulver. Facebook, I stream. Periscope for Twitter or X, I stream. Instagram at Chris Pulver. Twitch. Also on Discord at Chris Pulver Trading. Let's switch this up a little bit here. Let's talk this top-down analysis and then go into the charts. There we go. Hey everybody, happy Monday. Nice to be back. Happy 2024. I think a couple things that'll be important to look at for today to kick things off. Let's look at the major indexes as we have a bit of a slow start to the year, but probably not a slow start to this week. So let's jump into some clean charts. Go to the SPY for a moment and also bring up economic calendar and currency strength. Okay, so the calendar this week, pretty important stuff going on. Mainly, I'm just paying attention to the CPI data. So we have Chinese CPI data that came out slightly higher than expected, 0.1% higher out of China. We have retail sales out of Australia. We have CPI out of Australia. This is year over year for Tuesday night. Getting into the bond auction for the U.S. this week, the 10-year bond auction will be interesting. The 30-year bond auction will be interesting to see. Are people taking those auctions? What are bond prices doing? We'll watch that. But the big potential reactor this week catalyst is going to be Thursday, 8:30 a.m. Eastern time for CPI data. We have core CPI, CPI month over month, and year over year for the U.S. Hopefully that gets things moving and shaking a little bit this week, next week. And then China CPI year over year on Thursday. So interesting how we have CPI month over month on Monday. Oh, that's Swiss. I'm sorry. That was Swiss this morning. My fault. Thursday, China CPI data. So it'll be important to watch the PPI, CPI data Thursday. And then we have Thursday, Friday combo with US data, CPI and PPI. A lot of acronyms, but hopefully a lot of action that we can trade. So taking a look at where we are pre-market, pretty much where we closed yesterday, or I'm sorry, we closed on Friday. Market took a bit of a breather. I could see the market. I'm going to look at this morning once we have opening bell. Are we looking at a bit of a pullback, to previous resistance becoming support, and then we look to see a bit of a rally. Is the rally done because we're back to all-time highs? The market fought like heck to basically get its way back to the 2022 levels. If this is resistance, I could see a lot of indecision happening in here. That might take longer than traders want. Is it justified to make new all-time highs? I think that the one potential way it gets there is looking at the CME watch tool. And by the way, let me jump in here and say good morning to everybody while I'm at it. There we go. And by the way, all right. Perry, good morning. FK, good morning. Pat, good morning. Larry, good morning. Herbert, Don, Mason, Magpie, what's happening? Ruth Ann, Jan. A lot of rhymes this morning. Good morning and happy Monday. Happy 2024. There we go. CME watch tool. So the Fed is expected to do nothing for January. There's no FOMC with press conference in February. So it's all about the pause right now. I'm sure that the Fed wouldn't be terribly upset to see the market basically pause. Pullback would probably be likely. Maybe the Fed can get some free mileage out of talking it down with a firm, not a firmer stance necessarily, but a neutral stance. Not super dovish like the market basically interpreted and digested in November, December. Here we are looking at the potential rate cut still coming, potentially, okay? Still coming in March by 25 basis points. The market's anticipating, again, another 150 basis points from where we are now to where we are at the end of the year. That's still a lot of cuts. So I don't know. We're gonna have to find out. And of course, this week we'll find out with CPI. I will say this: if CPI prints on Thursday morning for the U.S., and we see Thursday morning CPI print a little hotter than expected year over year, especially 3.2. If it doesn't print below 3%, I don't think the market's going to like it. That's just my thoughts, but I think that if we print 3.2 as expected, 3.3 higher, 3.5 higher, then we're probably going to see the market's reaction a little bit more to the downside. Remember we had this huge run, one of the biggest, monthly rallies. I mean, this is 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row. That's probably one of the most simple and amazing Santa rallies I've seen in a long time. So pretty good stuff. I could see the market getting checked a little bit on that, coming back to retest the highs. That's around 460, possibly pulling back into some, from low to high Fibonacci levels. We'll find out. And of course, if this is just a big range, we have all-time highs, we have 2022 lows. Are we in for that type of correction year? We will find out. Okay. Morning, Lee. Good morning, Henny. How are you? Nice to see everybody this morning, and it's nice to be back. It was a very busy, very wild couple of weeks that I was off, and it was nice to have the holidays hit during the trading weeks. Things weren't terribly active, which was nice to just kind of take a step back and decompress for a little bit, which is always needed. And hopefully you all did the same thing and enjoyed the holiday break. So off we go. Okay, so point is, I'm going to look at some trades this week. The SPY, the Qs, the DIA, the IWM. We also saw the same type of thing. QQQ, retested all-time highs, and again, tested, not necessarily closed. So we had this high. If you look at exactly where that high was back in November of 2022, you can see that the weekly chart did not, well, I take it back. It just briefly closed above. Then we had a nice little, looks like evening star formation here at the top. Again, doesn't mean that this is super bearish, but a couple of options would be this is resistance, this is support. One very ominous pattern would be something like we had here, right? If we have a type of topping pattern, we set up the structure, fall back into this area, create a neckline, that could take some time to play out, but it'd be, or the market just dips a little bit, uses this structure, and then pushes to highs, maybe forms a top a little bit later with a rising wedge. Okay, so a couple things on the higher time frames. DIA did a fantastic job. A lot of this with the top 30 stocks, big blue chip stocks, big dividend stocks, closing above all-time highs. That big Santa rally to the upside, and here we are talking about it now. Little indecision, coming in to possibly check this run, maybe a pullback into previous all-time highs becoming now support if there's any upside, or this previous high here from 2023 coming back in to offer some support. If we take that out, oof, that would be a very disappointing run to just kind of erode the entire rally that we saw from November, December. So again, looking to see if volatility kicks up this week, next week. I'll probably be positioning for this in equities on demand. I'll probably position for this out to next week, not just this week, because CPI is on Friday. So I'm going to look to, or I'm sorry, Thursday. So if we have Thursday's news and Friday's my expiration, I think that's a little tight. So I might end up going out to, Monday, Tuesday next week if I can. I might push it all the way out to Friday next week and see if I just am willing to buy a little bit more time and just see how the market responds to that. So we did the SPY, we did the Qs, we did the DIA, IWM for the Russell 2000. Big rejection here at major range levels. I wouldn't be surprised here. This holds, and again, it looks pretty terrible, but could the market just erase what it just created in November, December? We'll find out. I do think it's a pretty straightforward trade. If we get back up into this high, then everything looks good for the Russell to continue to rally. Maybe playing catch up, getting to all-time highs at 20, 230, 240. But if we just have high to low, a little bit of a pause, that could be a bear flag that just retreats all the way back down to these lows at 162. Okay. Another top-down piece would be dollar index. Dollar index is trading 102.34. Pretty strong support on the dollar. In fact, very strong support on the dollar at this 100 to 101 area. I know that's a big, 100-point range, but you can take a look and see here that we had support. We had a false breakout there. We hit support again. Now, we got this pretty spot on. We said if the dollar turns over here, that's what would help also boost the stock rally, and it did. So as the dollar was dropping, we saw the stocks rallying pretty aggressively, which was great. Now that we see the dollar forming some pretty strong support, I think support holds in this area. I think that makes it a pretty difficult sign for if the dollar, holds these lows and works its way back up into this range, then guess what? Dollar rally, stocks drop. Okay. Um, why would that be the case? I thought the Fed was dovish. I thought the Fed's pivoting. Well, I don't know if the Fed is going to be dovish, as dovish as what the market wants for 2024, right? The market's pricing in, 5 or 6 rate cuts. The Fed, in reality, might give us 1 to 3. I don't know. I think that inflation it's not sub 2%. This week's going to be important to watch, and we're going to see how the market reacts to it with kind of the first big catalyst of the year. So we'll see. This story is going to get put together pretty quickly, and we'll see how the market wants to interpret inflation. Does it matter right now? It probably matters enough because it's what's going to be influencing the Fed and their decisions. Okay. Let's see here. In and out mostly. Oh yeah, he's around. He is around. Don't worry. Don't worry, Ruthann. Benji's still alive and well. And I'm surprised you don't hear him because he's gotten louder. Gold. Yep. Let's take a look at gold. We'll keep this in the top-down portion. Gold at 2021. Again, this is a weekly time frame. And here's what I think. Okay, gold. We get some closes above on a weekly time frame. I'm definitely long. Okay, I think that this was what got gold traders all excited. Clearly, that was a nice rejection. I wouldn't mind looking at this high and this low and finding a halfway point. If we find a halfway point, pull back in here, decent amount of support for buyers to reestablish and look to see if they can get a big run later on. Where would gold's strength come from? How about monetary policy weakening the dollar, inflation getting lower, or in that case, inflation getting higher? I mean, they've always said gold is supposed to be an inflation hedge. Well, I mean, it kind of worked. I mean, once we had our 2020 COVID scare, inflation went nuts. I mean, gold did run. Problem is we didn't have any follow through from there, right? So the chart to me closes above. Gold gets bullish pretty aggressively, but I'm not willing to call, buying it now and saying like, I mean, look, if you're buying it now, you're buying it as the dollar cost average, right? You buy some here, you buy some here, you buy some here, and you hold it. Because if we have this huge rally and a lot of indecision, then you just level yourself in and you're looking for higher highs eventually. That's my thought, right? So I'm going to stay out for right now, possibly a midpoint retest. I'd like to maybe go level 1, come all the way back down to range lows level 2. That would make sense that if the dollar is also going sideways, that gold finds major support. We get a rip on gold, that's resistance on the dollar, right? If I go DXY. So that's what I'd be looking for. I mean, if I have an optimum level to buy gold, it's going to be down here at 1700 or 1680. But I'm probably going to have to settle for something around 1900 because that's the halfway point of this range. But I will say this, if we're talking about gold in the next 1 to 3 to 6 months and we're up here above 2000, I'm long. And if all I looked at was measure this move and measure this move, we're talking gold probably around 2500 an ounce. In fact, I'll give you that exact projection because I already did it. 2470. That's measured. Okay. And if we look at it from a symmetry swing, which will also be interesting. Let me see here. That's a trend line that I have. If I did it from this, let me box this in. If I go from this high, that low and high swing, and then I copy and paste that, and we project it there or project it down to that little fake out formation, that fake out breakout. That's around 1624, still projected to be around the same thing. Yeah, okay. So $24 to $2,500, I think gold gets there pretty quickly. If we're in the wake of just longer term trend pullback, trend and symmetry, if this pulls back and hits symmetry again, we're talking gold at 3,000 an ounce. So big moves, that's certainly not going to be difficult to see. It's just, are we okay rationalizing, oh my gosh, I'm buying gold at all-time highs? Maybe, you know, but if it ranges, it ranges. So we'll see. But I like the pretty clear evidence that if it's above 2100 closing on the weekly chart, closing on the daily chart, I'm long. Okay. All right. Let's talk. Let me switch this up a little bit. So let's do crypto for a moment. Okay, we'll get into Bitcoin here briefly. 45,000 on Bitcoin, and BlackRock and other ETF providers reveal fees. Oh boy. Oh boy. Well, yeah, of course there's going to be fees attached to an ETF, right? There's fees attached to the SPY. There's fees attached to other ones. I'm curious to see how steep it is versus just, hodling, right? The hold on for dear life. So I'll read that later. A pullback would be great. I'd love to see, some type of retest on this rally here, maybe establishing a bit more of a trend. So otherwise, this could be a bit of a, overstretched move. We pull back a little bit. I think we're still overstretched. If I go to this chart on Bitcoin, I think we still have some divergence on the daily. Yep. So I could see, this is daily time frame. Let's check some pivots here. One thing that sticks out, and I was going to talk about this when we get into Forex, but right here, we have 1, 2 weekly pivots. We have 1, 2 monthly pivots, and we have 1 yearly pivot. Just kind of cluster these together, and I could certainly see, just from a technical standpoint, I could see a pullback coming into this like 32 to 36,000 range. Let's tap that yearly pivot. I, for one, would like to look at that as a buying opportunity. See if we can buy that. I would be buying it at least. Um, you know, price just keeps grinding a little bit higher. That 48,000 mark isn't that far away. Maybe 50,000 is a nice round number if the market's going to create some resistance. Would it be an ETF rolls out? Maybe it's disappointing. Maybe the ETFs don't roll out. It's supposed to be, this week essentially. So if there's disappointment on the ETF space for crypto or for Bitcoin, then I think the market drops very aggressively. Or something around the ETF reveals that it's not as great as everyone thinks, and I don't know. But again, technically, if price supports this thesis where we're coming down here for checking some of these pivot levels, I would still like to look at that longer term to buy. So a pullback would be great. I'm still long. We got in pretty heavy this last year around 17.5 and got in again around 20 to 21,000. Also had a nice little breakout here at 30, 31, 32,000 that continued to run up. So 2023 was a great year to be in some Bitcoin, to reestablish some positions or get in for the first time. We talked our way through it pretty well. We had a lot of opportunity. One of the best performing assets of all of last year, outside of Nvidia, which I think ended up closing out close to 200% for the year. Will it do that in 2024? I don't know. Probably not. Nvidia, I'm just gonna look at it for fun, but we're sitting at 490. We pretty much put in the tops here around 500 bucks. I think it's going to be tough to justify going much higher. It certainly can, but I think competition's heating up a little bit as far as the supply chain goes. So if we cap these levels, I would see. And look, I think Nvidia is still a buying opportunity. It's just where. Could we see Nvidia come back and retest these levels at 400 plus? If so, I like this support. I love this support. Take this low to high rally, get your kind of 50% zone in here, and anywhere between, like, let's say 400 and 320, so about an $80 area, I would be pretty interested in trading some Nvidia there. See if we retest highs or go higher, right? But for right now, I mean, I'm not doing anything. I'm not buying this. I'm not buying that. No way. Options only. There's no way I'm going to own that stock. So if I'm owning it, it's going to be through options. Okay. All right. Back to crypto for a second. Let's go Ethereum. Ethereum, we're trading at 2265 again, overbought conditions with some divergence. We had a big flash move, it looks like, per this feed. This is ACAP feed. I should have some videos coming out via ACAP in the next couple of weeks. I think I've got like a list of like 10 videos I'm doing for them. So Ethereum, let's check this. Let's check this price. Hang on, let me check this chart here. Ethereum weekly chart. Okay, do we have the same type of spike? So this spikes down to 2005. This spikes down to 2095. So a slight wick discrepancy, um, or yeah, rising wedge formation, which would be ultimately bearish for Ethereum, but I don't necessarily see that. High, low, lower high, lower low. I think what Ethereum is lacking is, well, this is where I think we're closer to. If Ethereum plays catch up and outperforms, then the stretches we're going towards 3,500. Okay, this run again technically would be if Bitcoin eclipses 48,000 on Bitcoin spot price, that Ethereum plays catch up from roughly 23 to 35. So Ethereum still has room to kind of make up to catch up to Bitcoin, and we might see a little period where some of the altcoins and others. I'm just going to say I'm lumping those together, obviously. But if Bitcoin 48,000 kind of holds for now, a bit of a pullback, then yeah, I could see some catch up being played on other coins, Ethereum being one of them. Okay, there was a trigger, just more anticipate. Yeah, I mean, we'll keep an eye on all the news this week. I mean, this is supposed to be a big week and a big reveal. BlackRock's probably waiting with bated breath on everything with a SEC approved or some type of regulatory body approved, but there might be more to come, more to wait. There might be some uncertainty around it, and look, maybe the price got ahead of itself, right? I mean, the reality is this does this turn into like one of those classic sayings, buy the rumor, sell the news, right? Where the rumor was we're gonna have an ETF, and everyone got all excited, and then the news is, okay, we have an ETF, but it's not like everyone thought, and the market's a little disappointed at first. Sure, doesn't change my long-term outlook, not at all. But I do think in the interim, I mean, having this low, and run here, pull back, run here. The higher we stretch and the more overbought we get, the more likely I am to look for a technical pullback. Cryptos are pretty darn efficient, thanks to the time I've spent in the forex market since 2007, 2008. I see a lot of efficiencies in crypto just like I do in forex. Speaking of forex, let's switch gears to forex. Go ahead and type in some charts if you're interested. You want to follow along with some currency pairs. I was looking at stuff last night. So let's go to this. So I posted this in my Telegram channels. Let's see here. Let's open up some Telegram. There we go. Portfolio builder. Okay. So portfolio builder. I was looking at the Swiss crosses last night. I was looking at the portfolio. I'm up. As far as the balance goes, I'm up like $125. That's mostly swap and positive rollover. But I am down in a pip drawdown because the Swiss pairs have not responded to the big runs. But one of my favorite trades so far for the year, and this is just getting set up, and let's actually talk about this through the eyes of the pivot. Okay, here's why here alone here's a big forecast for 2024. Alone, this would be why I'd say, look, if you can hang on to some of these Swiss crosses, and I don't know if we're gonna have a flash crash. I don't know, but having this level, that's a long stretch on a daily time frame. I don't know if it's over 200 bars, but we're gonna find out. Yep. So we're sitting at 243 bars in the Aussie Swiss. That is a fantastic sign that this is likely going to find this 200 EMA. I think, here's the deal. Look, we come back down to the same low and we retest, and we work our way back up to the 200 EMA, and we break above and we go higher. But the trade I'm after is we hit the EMA, we hit the day or the yearly pivot, and how do we get there? Well, we could do this. We could go down to the exact same low and bounce off that and come all the way back up. Okay, that's one way. We can go down even further, take out these lows, be divergent on higher time frames, then create a bullish pattern, and then longer term we're higher. So I am still, and I said this a lot in 2023, and traders had to bear with me on the patience side of things, but I'm still actively looking for a bottoming formation. Aussie Swiss, great setup, right? I mean, look at that yearly pivot. Uh, 6,000, or I mean, it's not thousands of pips away, but I mean, I'm looking at a solid 300 pip trade to get back to that pivot. We come back down and retest the lows. We're looking at a 400 pip trade to that pivot. And if we put in a bottoming formation, then we of course measure that move and project that move back up into maybe the sixes, 62, 63, 64. So one of my best trades as far as technicals go this year, just kicking things off. Henny, is that Aussie New Zealand that you're asking? Okay, here is the CAD Swiss. Pivots at 65. Again, actively looking for a bottoming formation. If we start to break, this was tested the 200 EMA. We poked it right there. So this one doesn't have the same type of extreme as the Aussie Swiss. But if we end up breaking the structure eventually, something like this, getting its way into kind of retesting these levels. I'm still after this big pocket up here. This is a big supply zone. There's a big gap in pocket up here around 71.50 to 72.50. This is ultimately my profit target. So it's going to take some time, but that's where I'm looking to get some profit on the CAD Swiss. Also, it doesn't suck that there's a yearly pivot up here that still has missed. So 71 to 72 big profit levels. We're trading at 63. That's 800 pips away. Do I like the trade? I do. Okay, Euro Swiss. Euro Swiss, couple of things. Right in here, yearly pivot at 95.50, and we're sitting here at these all-time lows. I think that it's just going to take some time. Eventually, when this trend line breaks, that's going to be my bottoming formation. So could we go a little bit lower? Yep. And like I said, there's a bit of a concern that this trend has been to the downside, and this thing, flushes everyone out with a flash crash move, and then whips back up with a huge reversal or possibly intervention by the Swiss National Bank. One thing I took a look at last night was right here. Yep. Let me find you a link for the Discord channel for sure. Let's go free group chat. We're live. We're good. Yep. Okay. Discord. There you go. I took a look at sentiment. And, again, this is retail sentiment, so you tend to take if you want to follow institutional flows, you're going to take the opposite of some of the extremes, right? So taking a look at our FX sentiment, take a look at some of these Swiss crosses, Euro Swiss, okay? Majority of retail clients, retail traders are long Euro Swiss. Okay, so that means there's probably more pain ahead for where the Euro Swiss ultimately has to find a bottom, right? So how much lower? I don't know. I'm willing to kind of dollar cost average into this thing at 9,000. I mean, for me, a 300 pip area is nothing. If I'm trading small and dollar cost averaging in, I'll allocate 1% for this entire drawdown. So it's not a huge deal. I could certainly stomach on the Swiss basket for me. I could stomach a 3, 4, 5% drawdown to end up generating 10, 15, 20% of the upside. Because the one thing I haven't done yet is really start to add aggressively on confirmation because I haven't gotten the signs that we're going up yet. So what I'm doing is I'm just buying levels. That's it. So if I buy some at 93 and then I buy it again at 9, and all of a sudden this structure changes, well, guess what? That's trades 1 and 2. I start adding. I get my profit levels back up here towards 102. We turn that into a bullish pattern. We project this move all the way back to 105, 106, right? Then there's lots of opportunity to add there. So do I like the setup? Yep. To start off, I like the yearly pivot. I like the structure ultimately changing. I'm looking for a bottoming formation. We start measuring moves back to parity plus. If this becomes a larger pattern to the upside, something like this, perhaps. I didn't draw that very well, but you get the idea. Head and shoulders, crown pattern, projected to move back to 105, 106. The nice thing on this one is we're trading at 93. I'd like to say I'm taking profit here at 105, 106 for 1,000 plus pips. Adding a lot of trades along the way. So Euro Swiss is good. Pound Swiss. Let me go to the weekly time frame. Okay, Pound Swiss still had the flash crash move from the UK bond market back in September 2022. Do we have this? I'm just going to wait for that structure right there, right? If this is low to high, we end up having a high or low. I'm looking for a pattern in here. That would be my A, B, C, and then project my symmetry to a D. So that puts us right around 120. If we start putting in a bottom pattern now, the other side of that would be the following. We still have this area where the flash crash was created, and we could still have that area where the flash crash is tested. So this could still be pushing lower, 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 lower. I'd be looking for some type of double bottoming formation, come back up to range trade, all the way back to like 115. Here's the deal. If this is a low and it hits 115, that's profit target 1. But if it breaks and goes above that, you just double that move. And then profit target 2 is all the way up here at 1.30. So I see a lot of upside potential as far as rates and inflation and things like that go this year. Remember, the market's anticipating that rates will be cut. I don't know about how much. I mean, maybe the Fed doesn't cut the rates 6 times, but if they cut it once, twice, 3 times, it's certainly a different story than raising rates, which I don't see a lot of central banks doing, right? So if the central banks as a whole are pausing where they are right now or looking to cut rates at 2024, that's the bigger theme. And it's just, if they cut and how much they cut. The Swiss National Bank could be in that ballpark as well. They went from negative 0.75 to 1.75. That's a pretty big swing, right? Negative 0.75, okay, to 1.75. That's a 2.5% swing. Now it's not as aggressive as we've seen other central banks. I mean, the ECB went from 0 to 4 plus. The Bank of England went from, I don't even know where they were at before, honestly. Were they at 0.25%? And then now they're at 4 and change. So, I mean, we've seen some big swings. That's my point. So the U.S. went from effectively 0 to 5.5%. The U.K. is at 5.25 right now, and the ECB is at 4.5. The Aussie's at 4.35. New Zealand's at 5.5. Canada remains at 5%, I believe. Yep. And what other currencies I'm missing? Japanese yen, of course, negative 0.1% still remaining there. And that positive swap is a big reason why the Japanese yen still hasn't turned. Aussie yen retail crowd is short. Euro yen retail crowd is short. Pound yen retail crowd is short. CAD yen retail crowd is short. Dollar yen, if I can find dollar yen on here. Maybe it's up to the top. Dollar yen. I think a lot of the shorts have been peeled back a little bit because it's just stubborn. I'm honestly, I know I talked about a lot last year. We only traded the yen pairs a couple of times, and it didn't bother me at all. I don't want to trade a reactive, manipulated central bank awaiting currency pair. It just it doesn't cooperate right now. The risk off, the safe haven flows that the yen used to receive aren't happening right now. The carry trade is still alive and well, and it's making it stubborn where the yen doesn't want to get stronger. And if you are trying to short the yen, it's a very expensive trade when you're holding it for. I mean, I would hate to hold a yen short for more than a couple of days, maybe a week or so, just because it's annoying to watch the brokers take away. If you put in a mini lot, for example, you're going to pay, I don't know, probably $1 to $5 a day just by holding something rollover wise, negative swap. So let's see here. Intraday trading strategy. Yeah. So Raken, if you join the Discord, why don't you just hit me up with some messages on Discord, and I'll talk about that a little bit more. I mean, I've got tons of stuff. I've got some simple strategies. I mean, the one thing I look at for intraday trading would be you gotta have volatility, man. I hate scalping. I mean, I started trading forex as a scalper, and it was great when pairs were like the euro dollar was moving 150 to 200 pips a day. That was back in 2007, 2008. I haven't seen that movement ever since. So if I'm day trading, I like volatility. Volatility comes to, I mean, you're getting some yen crosses here and there, you're getting some pound crosses here and there, but here's my one beef. If I put my butt down in my seat for 3, 4, 5 hours, which is a long time to just grind. especially in day trading. If you're going to stare at charts and you're going to watch price action on small time frames, you can work and work very hard for 3, 4, 5 hours a day. No guarantee there's a good trade there. And so as a day trader and a scalper, I found myself, over trading or forcing trades, and sometimes I just didn't like it. So I'm not discouraging it. Obviously, if there's good volatility, the market's great. And day traders, do fine because you're not looking to hold anything. You're just find good price action, find good structure, find a good flow for that session, and see what you can grab. Right? Aggressively protect your risk and move your stop to break even. But yeah, I've got easy alignments for that. So hit me up on Discord, and I'll give you some pointers. That helps. I shared it up above, didn't I? Yeah, it's up like 10 chats. Let me see if they'll copy paste again. See if that link will work. Okay. So we're good. So again, wrap up here. Not wrap up. I mean, I started the session early for a reason. But it's opening bell. I like to take a look at some stocks and stuff. I want to get into my broker platform. We're trading at 469. See where the week unfolds. We have big news on Thursday. Swiss pairs are what I'm really watching. That's going to be one of my big narratives for the 2024 year. Central banks obviously is going to be heavily influencing where the markets go forex wise. Are we supported by central banks with more dovishness? Is all the good stuff priced in? This is what's crazy. Like the market does this, right? The market had an awesome Santa Claus rally, tons of risk appetite, dollar got weaker, all because the market's anticipating going into this year that the Fed's going to be cutting rates, or the Fed's at least, pausing for longer, willing to cut rates. And that's the reality, right? So a lot of this kind of good stuff has possibly been priced in, just means that reality probably doesn't look as good. So New Zealand Swiss, why am I showing you this one? Same type of thing. We're sitting here with a lot of indecision. We have a yearly pivot right there around 55 and change. We're trading at 52.80. So we have, come back and retest the lows, have a 300 pip move to the upside. If we come back and go lower on the New Zealand Swiss and then rip our way back up to the pivot and then have 5 waves from there. This is what's nice. I'm trading it super small. I am telling you and I'm warning you that something flash crashy could be happening this year in the Swiss pairs. The significant tops and bottoms we see in the forex market has been this way since 2008, essentially. I mean, we've had flash crashes galore since 2015, and certainly on the Swiss pairs, 2015 was the one that everybody knows. But Brexit flash crashes and oil flash crashes and COVID flash crashes. It happens. But those flash crashes, if traders can survive them, if you can trade small enough and you're position trading like I am, surviving that flash crash is what ultimately sets up those tops and bottoms that we can make some good profit on. So it's not easy, and it takes some patience, and we might sit here and wait and wait and wait. But the silver lining with waiting is that we at least have some positive rollover going in right now if you're trading the Swiss. The only thing you're not getting positive swap on is Swiss yen. If you're holding this short, right, you're not getting paid. You're holding the other currency pairs long, you're fine. Links are disabled here on YouTube. We do. Sure. If you're on Discord, my server, that's weird. I don't know why it's deactivated. So my server is Chris Pulver Trading. If you want to search it out, it's all one word. I don't know why it did that. So I'll just show you right here. Here's my Discord. So the server is Chris Pulver Trading. And so free group chat, anything I post on YouTube and videos and links, my weekly blog, anything I post, analysis wise, education wise, private instruction. I just have all my stuff kind of a one-stop shop for my content is here. Okay. Hopefully that works. All right. Any other currency pairs you like to take? I thought somebody put in like that. So the good thing is I like the trade. It's just where, is this an actual break and go? Is this a break and go? So I think there's up and downside on Aussie New Zealand. To the downside, I would be looking all the way back here to the left at 1.01. To the upside, I look all the way up here at 1.14. So probably, 400 pips of opportunity one way or the other. It's just we need to see a breakout. No breakout yet. Okay. Other currency pairs, dollar index, as we're going to get on the euro dollar, I could see dollar index going sideways, and therefore, something like this on the euro dollar. Euro dollar heads back down. That's the dollar index. Aussie dollar, possibly the same type of thing. If we turn this way, right? Dollar gets stronger in the interim. Aussie dollar turns south. Range bound trading. So a lot of potential range bound trading on the dollar for now. As the market anticipates that rate decision coming in March, not June 31st. I think that's going to be a bit of a no news thing because it's going to be a pause, but it's what the market anticipates and maybe prices in for Q1. Again, you have to remember seasonality stuff. We're kicking off a brand new year. There's going to be trends. There's going to be ranges. There's going to be pre-summer pushes. There's going to be breakouts. There's going to be uncertainties. There's going to be things we don't even talk about today that's going to happen this year, right? So it's clean slate. Doesn't matter how well you did last year. I hope traders did great last year. It was a good year overall. Okay. All right. Um, any other charts? Any other thoughts? I'd like to jump over into the stock market really quickly. Right now we're trading at 468 and change. Is this up on the day? Let's see. Let's go to the daily chart. Yeah, we're fine. So I think I'm going to look for something. I've got equities on demand class starting in 15 minutes. What I'm probably going to start looking at is this. If I take a position here going out maybe 2 weeks, give myself a little bit of volatility to the upside, downside, play it directionally neutral, and to see if the market wants to move. I don't really have a bias here because I could see the market, wanting to stretch a little bit higher, trying to hit these highs. Inflation data coming out on Thursday could be a good catalyst. But like I said, if we print 3.2 or higher, okay, 3.2 or higher, I think the market doesn't love that as much, right? So then the Fed's message at the end of the month could be not as great. This could all change. All this Fed Watch Tool stuff. Pause is expected, which they're probably going to pause. March is going to be where you're going to get some free mileage out of the talk, right? Jerome Powell's press conference in January. There's no rate decision with the FOMC, or it's FOMC minutes. You'll have there's no press conference in February, so March is the next big meeting. This is the first anticipated cut. The market's still anticipating 5 to 6 cuts. That could all change here. That could all change in the end of the month. So do we go from 5 to 6 expected cuts to maybe scaling that back down to like 2 to 3? Maybe. If the market sees the Fed's not going to be as dovish, the Fed's not going to be as accommodative, maybe the Fed's only going to cut rates because they see a recession. I don't know. But that could be where we start to see a little bit of a decline and correction in the markets. I think investors, if you held through 2022, you got back to these levels, you should be happy that it didn't really cost you anything other than time because you didn't have really any gains, right? If you weren't adding to your positions here, nobody made money for the last 2 years. If you were trading, you made money here, you made money here, you made money here, you made money. If you're trading, there's money to be made. If you're investing, we are essentially back where we started. We're in a 2-year drawdown. Okay. Testing the highs is great. Doesn't feel as painful than being down, 20% on average. But the reality doesn't mean that this is justified to go gangbusters higher. If we end up having, a reality check and it comes back in here and it can't catch some bid, then it might just erode a little bit of that Santa rally. We're going to find out. Okay. We're going to find out. Okay. Here's the deal. Got a lot of people watching today. Would you do me a favor before you bounce out? Will you hit the thumbs up button for me? Having 40 to 50 people watching. Real quick on the schedule. Mondays, Fridays, I will start these sessions. I'll plan to start them at 9 a.m. It's a little bit more time to kind of ease into the session. We'll run a little bit longer, kind of a long form session, which is totally fine. But that way I'm not rushed to jump, right into equities on demand at 10 o'clock. And also, I've got one other portion here. Let me see if I posted this. Yep. So right here, I'm going to start doing some Wednesday sessions during the week. So midweek market minute, probably open up a session around noon. Okay, so on noon on Wednesdays, just kind of a lunchtime session, a little power lunch action. But I'll start doing YouTube live sessions Monday, Wednesday, and Friday. Okay, so it should be pretty consistent, 9 a.m. Eastern time, Mondays and Fridays. Wednesdays, I'll probably do a power lunch session. That midweek market minute is going to be probably a noon session. So if you want to follow me on YouTube, that's great. Subscribe, all that good stuff. Hit the thumbs up button for me. I appreciate that. And I'll let you go for today. Any other thoughts, any other concerns, any other questions, any other charts? And most of the time, I'll put my face on here. I was ready to be seen today. Okay. Aussie dollar. Yeah, Aussie dollar range bound. I mean, range bound's good. Why do I like range bound? Because we find a lot of stuff, right? Range bound, we find some pivots. Range bound, we find. Um, let's see. You're looking at that week. It already tapped the weekly pivot. Who's asking that? Weekly pivot point, maybe a good 100 pips. I don't know. No, my thoughts are this. I think we work our way a little bit lower. Look, all my dollar crosses are based on this. DXY, I think is going to find support and it's going to go up. So if I think it's going to go up, I'd like to see a pair like the Aussie dollar find support, find support, find support, and look to buy it low. I don't want to buy it right now. If it goes up, that's fine. But I'd rather see if it gives me an opportunity to buy this thing where I have, hundreds of pips of direction versus a little guy. But that's just me. Okay. All right, traders, so I'll let you go. Equities on demand students, I'll see you in about 10 minutes. Nice to be back. Happy 2024. Let's get to it. Let's grind. All right. Talk to you all soon. Thanks. Bye.